make an introduction to our Heiken Ashi basics, and then I will cut to the chase and I will give you the system straight off. So Heiken Ashi is basically similar to Japanese candlesticks, but it uses a different formula. Okay? It uses a different formula for calculation of the average of price. In Japanese market, Heiken Ashi means average, and Ashi means pace. So it's an average pace of the price. So because of that, we cannot comprehend Heiken Ashi as simple price action tool. We need to know that every Heiken Ashi candle which has been printed out on the chart is basically the average of price. Because of that, it's to identify trending periods, potential reversal points, and classic technical analysis patterns. Because of that, it's very good to combine it with momentum and direction. Technique for charting Heiken Ashi is different than using traditional Japanese candlesticks. Okay? That's important. You will rarely see the analysis, only the analysis done, technical analysis, done by Heiken Ashi. That is why Heiken Ashi has its roots in that average. And average is mostly used for trading, not for price action analysis, as you can read on websites such as Forex Street and others. So Heiken Ashi modifies the traditional Japanese candlesticks by sending the open and close through a calculation of the average. Because of that reason, we are using Heiken Ashi mostly for trading. Benefits from using Heiken Ashi are indeed good. I need to say good because, as I say, major drawback of Heiken Ashi is it cannot be used in analysis. Okay? The analysis which you are reading every day is done by Japanese candlesticks, right? Trend lines, various indicators. But the thing is that it's very good for trading. So you will rarely see an analyst giving a price prediction on Heiken Ashi. But it's okay. If you're not an analyst, then you can really benefit from using Heiken Ashi in your trading. So main benefits are direction, strength, wick, which is very, very important, color-coded candles, and major benefit is also it can be easily coded through expert advisors. Now the thing is about wicks. We don't use wicks in indicator-based trading. We will use wicks only for price action Heiken Ashi trading. That is a different perspective than this which we are talking about at this point. Today I will present you indicator-based system, and in one of our next webinars I will present you how Heiken Ashi can be combined with price action trading. Okay? At this point, this system is very useful, as all Heiken Ashi systems indeed. They're very, very useful for traders who want to trade, a system, not overanalyzing, not doing a deep insight, just trading a system. So this is how Heiken Ashi looks when it's applied on a standard MT4 black background template. Usual colors of Heiken Ashi are white and red. So white and red. When you see a white Heiken Ashi candle, that means that that candle is bullish. Do not forget that these candles are the average of Japanese candlesticks of price. So they are not considered a simple take it or leave it signal. Heiken Ashi needs to be combined with other indicators for a confirmation. So white candlesticks are by default bullish, red are bearish. If you compare it to standard Japanese candlesticks, sometimes you will see that on Japanese candlesticks, red Heiken Ashi can be seen as a bullish Japanese candlestick. But if you trade Heiken Ashi, you don't take a look at Japanese candlestick because it may confuse you. However, there are some traders and systems who are usually applying both Heiken Ashi and Japanese candlesticks on their charts. But for that reason, we usually apply Heiken Ashi smoothed. That's another aspect of Heiken Ashi. This, what you are seeing now at this point, is standard Heiken Ashi, so normal Heiken Ashi. Have in mind, however, that there is also a Heiken Ashi smoothed candlesticks, which are this is Heiken Ashi smoothed. So as you can see, it's a lot different compared to Heiken Ashi. But don't be fooled, because this is not real price, guys. This is real price. Usually above or below these candlesticks, we can spot price action. It will be very, very good if it's always been like this. If the price is smooth as this chart, we would be billionaires, but it's not that smooth. Because if you compare standard Heiken Ashi to the left side and Heiken Ashi smoothed to the right side, you can see the difference. This is indeed the same chart, the same time frame, but look at this, it looks smoothed, but the price action is here. These are standard bars, standard MT4 bars. So do not think that this is real price action. This is real price action, guys. These bars which you are seeing at this point, this is price action. And this is just another confirmation of a possible trend, momentum, and entry. Because of that, we need to combine Heiken Ashi smoothed with indicators. Okay, remember that, because a lot of times I witness that this is indeed, this looks great when you put only that on your charts. It really looks great. Imagine this. Look how smooth it is. And imagine this to the right side. Without Heiken Ashi smoothed, price action would look exactly like this, just without standard Heiken Ashi candlesticks. So this is why Heiken Ashi smoothed need to be applied with other indicators for confirmation. To the contrary, Heiken Ashi does not require a lot of indicators. Because of that, Heiken Ashi standard can be applied to price action methods. Recently, traders started using Heiken Ashi smoothed candlesticks, which smooths a lot of noise in the market. Yes, as indicator-based systems. Some studies in 2013 showed that Heiken Ashi is better used as smoothed. Indeed, in Heiken Ashi smoothed indicator-based systems, it's usually paired with moving average indicators. My observation has concluded that Heiken Ashi standard, this is standard Heiken Ashi, is better for price action trading, price action methods. For example, in one of our future webinars, I will be showing you how to combine Heiken Ashi with EMAs. Now, to the contrary, for system-based traders, Heiken Ashi smoothed is better. So Heiken Ashi smoothed is better for indicator-based systems. So when you have a couple of indicators which confirm the trend and entry, that is a time when we go with Heiken Ashi smoothed. If you want to trade off EMAs, like dynamic support resistance, taking patterns like 1, 2, 3, then Heiken Ashi normal is better. Okay, so this is my conclusion. Okay, and definitely it's method dependent. It's definitely method dependent. Okay. Now, what I have wanted to say, okay, yes, I've shown you this chart. Now let's cut it to the chase. This Heiken Ashi strategy has its appliance on any currency pair and on any time frame. I have tested it on 30 minutes time frame, which I will be using it today. But obviously, because Heiken Ashi systems are indicator-based, I usually want to trade, if I trade indicator-based systems, I want to trade it in between 15 minutes and 1 hour. Only some swing systems, I'm talking about intra-week swings, they are traded on 4-hour and daily time frame. So I recommend this system to be traded on 30 minutes time frame. You need these indicators. Of course, if you're not able to use these indicators, you can email me. This is free, so I will definitely send this to you. So you need just to email me, and I will be sending indicators and template for this system. So you need Heiken Ashi smoothed with these settings: MA method 2, MA period 6, MA method 2, 3, and MA period 2, 2. So 2, 6, 2, 2 in 2, 6, 3, 2, 1 below another. I will also show you that on live chat later. These are basically default Heiken Ashi smoothed settings. You also need a TDI red-green indicator, which we will refer to TDI, Traders Dynamic Index. TDI indicator basically is also put on default settings for this system, as I have described here. And the strategy is pretty much straightforward. The rules for long entry are as follows. Green line has to cross the red line on TDI. Heiken Ashi bar has to be blue. This is very important because we are using Heiken Ashi smoothed. Okay? So Heiken Ashi bar has to be blue. If it's 5 or more bars since TDI crossover, do not enter the trade. Wait for another setup. TDI preferably is below or very close to 32. Target, it usually depends on currency pair and the time frame. You can aim for 30 pips if you are trading on 30-minute charts, or 100 pips. As I say, my recommendation is 30-minute charts, because Heiken Ashi is a lagging indicator. So on 4-hour charts, it can produce later signals. That's why, so far, the best usage was on 30 minutes. Usually 30 pip stop loss is fine, but you can go with standard appliance of stop loss. If you're long, you put it below last swing low, but it's around 30 pips. Short positions. The rule is same as follows. The red line has to cross the green line on the TDI. Heiken Ashi bar has to be red. If it's 5 or more bars is TDI crossover, do not enter the trade. Wait for another setup. Now, at this occasion, TDI preferably should be above or very close to 68. So it can be close. It's better if it's above, but it's not a necessity. It should be close or above. Same rules for targets and stop loss as in short trades. This is how it looks like on your chart. First rule, guys, is that you need to have a cross of TDI indicator. In this example here, we can see that a red line, doesn't matter, you will always spot a green line crosses over the red or below the red. So when green line crosses a red, you count the candles. your entry should be filtered by Heiken Ashi smoothed candlestick. When green TDI crosses red, you wait for the first red Heiken Ashi smoothed candle if it happens in next 5 candles. So this was the cross, and your entry should be in next 5 Heiken Ashi smoothed candles. So the qualification is that one of next 5 candles should be red. We can see that in this example, second candle has closed as red Heiken Ashi smoothed. And this is your entry here. So the thing is that Heiken Ashi smoothed is lagging, and it will capture momentum to give you a trade opportunity. You are not interested to see, guys, that this is bullish or bearish candle, this standard Japanese candlestick. You are only interested to see that this candle here, Heiken Ashi smoothed, is bearish. Okay, this one, because that is the first bearish candle after TDI cross. Okay, it's very, very simple. Now, look at this filter here. We had green cross exactly at 32 above red line. So you see how Heiken Ashi smoothed candlestick has filtered out a potentially bad trade. Because at this time, you didn't have a signal to go long. But here at this time, you had a signal. Again, 1, 2, 3, 4, 5. Fifth candle here has closed as buy, as blue Heiken Ashi, and you're good to go. Next signal, green crosses red at 68, and you start to count. 1, 2, 3. Your third candle is your sell signal. Okay? It's very simple. You can see, very, very simple. Look at this one, guys. This is basically this month on GBP dollar. It's not that close, but that is why you need to also observe, not just take trades mechanically. Whenever I test the system or try to trade a system, I try to observe price action. Okay? So for this one here, yes, I will show later during the live chart. So 5, no trade, definitely. But at this time, look at this. Cross, but it's below 50 and in between 50 and 32. But you see, the trend is indeed to the upside because price is making, see, there is also a trend line. 1, 2, 3, or yes, third candle indeed. No, fourth candle. Yes, as I written it. Good. 1, 2, 3, 4. This candle is your signal. And you see where the price went. Let's see this one also. Okay. Forex Boyki was asking for a not trade. This is not trade. Green crosses red, but you see Heiken Ashi smoothed is blue. 1, 2, 3, 4, 5. After this, no trade. So no trade here. Let's see this one. Okay, a big sell here at the second candle. Although it was really close to 50, but sometimes there is the risk we can take. It's always best for entries, for first signals to happen around these regions. But sometimes when you see that momentum is strong, you can take the risk indeed. Now let's show live chart, guys. Let's show live. This is a live chart here at this point, and let's see dollar yen trade. So trend was here up, 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 up. No cross green from the top to the bottom. So this is where it was a cross. Okay, this was basically a signal, right? So 1, 2, 3, 4, 5, 6, 7, 8 candles, no trade. But look at this, guys. So Boyki, this is your no trade. But look at this. At this point on, here, we had another cross here. Okay, or here, or let's say it was here. Another cross, while green was above 68. 1, 2. This is your short signal here. This candle, because it's second candle, which closed red. So the Heiken Ashi smoothed closed red after 2 candles after this cross. So this was your signal here at this price. Forex Gal is asking, what is TDI again? TDI is Trader Dynamic Index. It shows you current momentum with overbought and oversold conditions. Current momentum is measured by green line crossing the red. If it's above 68 and crossing from above to below, it's momentum to the downside and vice versa to the upside. So this was, guys, your signal. So close of this price was 67. So basically that was 20 pip of a drawdown. And then look at the drop. Okay. So pretty much very, very, very good trade for our Heiken Ashi TDI. Now let's compare this to buy entry. So guys, I need to say, I haven't cherry-picked this chart. I'm just switching randomly to show you how it works. So I didn't cherry-pick it, really. Okay. Here we have another signal. And look at this. One first candle after this one was your entry. 30 pips possible. Let's see another one. 1, 2, 3. Some drawdown, then 30 pip possible again. I need to say, guys, that this has been one of the most popular systems of Heiken Ashi, which I have published with other markets a year ago. And I wanted to share also with you, because you're also my fellow traders, and we have a great cooperation with Forex Street. They are really great guys, publishing the analysis and giving the opportunity to really promote good stuff. And I really wanted to share this with you. So the odds are that you don't have these indicators. And I see that people have been still coming up to this webinar, and I will repeat the rules for those who have been late. And needless to say, if you want the indicators and template, feel free to email me. For all of you who still do not know about my email is, I will type it down. This is my email. Okay? So feel free to email and I will send you the system. Okay, next one, guys. What do we say? After a big drop, there is usually a big retracement. So this is our entry here. One, two, second candle blue. Close here and look at this. Straight to the upside. Very good one, indeed. Okay? Now let's find out the other Forex pair. I don't know, randomly. CAD Yen. Although I don't like to trade CAD Yen. It's a little bit. But we can check how it goes with CAD yen. It's a bit rangy pair, I think. For example, if I traded these minor pairs, such as CAD yen, Australian dollar, Swiss C, something like that, I would always love to see literally TDI around 68 and 32. Literally. And I really mean literally. Okay? This is it. Okay. 1, 2, 3, 4, 5. So your entry was here. 25 pips. Okay? And so focus on major pairs. You see, it's still possible to trade minors. But as with all minors, some minors are ranging, some minors are really too heavy on ATR. For example, if you compare euro dollar to euro New Zealand or pound dollar to pound New Zealand, you will see that euro New Zealand and pound New Zealand have almost triple the ATR of major pairs, euro dollar and pound dollar. So for novice traders, guys, I do not recommend trading minors, only major pairs. You will have a lot of opportunity to trade only majors. Yes, you need TDI. It's always best to focus on it. Boyki, it's always best to see where the price is overbought, oversold, and to spot the cross. Because first of all, you need to see where the cross happened. Boyki, I'm not sure that you understood. You need to spot the cross. So this is your cross. Okay, this, look at this. Green cross is red. Okay, below 32, right? And then you start to count. 1, 2, 3, 4, 5. I won't take the trade at this point because Heiken Ashi smoothed has not become blue. So no blue candle, we don't take a long trade. And look how the filter was good because the price proceeded to go down. If you need anything of this template and indicators, feel free to email me. Okay? So let's see New Zealand dollar. For example, let's see here. I presume that this could be a short trade, right? So here, look how big. Okay, you look at these filters. TDI is indeed having a short signal. But you see, there is no Heiken Ashi red. So this is a great filter to filter out potentially bad trades, guys. Okay? To filter out bad trades, indeed. Okay? Let's see other trades. Definitely very, very overbought. This is your Heiken, this is your TDI cross. And now let's count the candles. 1, 2, 3, 4. Fourth candle here was your signal. It took some time to develop, but overall you would have been some 10 pip in a profit if you traded from this point. But if you see that price is ranging, you guys, you know what I always say, there is no sin in profit taking. So when you see that price is ranging, you can take the profit. Why not? Okay? So this is how system is working. Now I will show the rules again. You can, I think this webinar will be uploaded. Now you can ask me questions if you have any questions, but I always try to be as concise as I can be, very clear, very simple in the explanation. So I hope that you have understood this quite well. If something is not clear, guys, do not hesitate to ask me at this point. I will share this screen with you so basically you can see how we read the rules. This is for longs, this is for shorts, okay? And very important thing is, always, if you want to be conservative with your trading, then you need to wait for at least very close to 32 or below 32 for longs, and for shorts above 68 or very close to 68. If you don't want to be conservative, then you can take some, let's say, signals such as this one, but it's always better to wait. Look at this signal here. It was good indeed. But still, you see, it was in between 50 and 68. So you can go with both aggressive and conservative styles. If you're conservative, you will have less trades. If you are aggressive, you will have more trades. So it's up to you to make a judgment. Judgment is always needed, I would dare to say, even if you're trading indicator-based systems. Because those indicator-based systems, they say, usually people say, can this strategy be automated? I would say, guys, it's always good to have a human factor when you trade. Because human factor will ultimately give you a filter for a potential bad trade. Even though if the system is telling me, sell it, okay, it doesn't tell you to sell it here, but just for sake of this webinar. Sell it here. I know that this is support, so I wouldn't sell on support, right? And definitely I would look to buy it, because you see, here there is a signal here, okay, this is your cross, 1, 2, 3, 4, 5. Fifth candle is, okay, it closed bullish, Heiken Ashi is bullish, this is signal, and you see this is probably the very big support, indeed, 62.30 on New Zealand. This is big support, and indeed, N pattern, look, and there is your signal. So always try to apply a human factor in it. Because, if we all traded like robots, well, there will always be a string of losses, especially when trend is strong, if we only traded as robots. We need to know when it's enough to trade and when it's enough to take profits and go out with our friends and family. Do not forget, trading is not about making pips. Trading is about protecting your equity, preserving it, and then making pips. Because of that, it's always good to have a human factor in it. Human factor is what ultimately differs us from machines, and that is a good thing. So guys, this is everything I have prepared for you today. I don't see any questions, so basically that's good, because I know that it's very clear. I hope that the sound was good. Forrest Boyke said a couple of times that there was a fade in, fade out, but ultimately it was good. There was no complaints. And, well, guys, that's it. If you don't have any further questions, okay. Comments. Forex Boyke saying thank you. For Ella is saying very informative webinar. Thank you. Okay, I think that this webinar will be uploaded to Forex Street website, so you can watch it later. I presume it will be like that. I'm not sure that, yes, our Forex Street administrator is saying that this webinar was recorded and you will find it in our key archives. That's great. So basically, yeah, this is it. Boyke, this is the link, forex3.com/webinar/archives. And as you know, you can always check out my profile on Forex Street. I'm updating it with daily analysis, with exclusive analysis, so you're always free to read it and draw some conclusions, of course. I'm here to help you, don't forget it. Thank you for everything. Thank you for comments. And as always, guys, if you need anything from these webinars or past webinars, I will send systems to you. Cheers, and as always, guys, trade safe.